Let's make sure that little bear over here is showing up nicely. Good morning. How are people doing today? It is I, the Savage of Wall Street. We are going live once again. Markets are kind of in a mixed bag, but the Savage 20 are ripping. What do we do? Right? Everyone's got like their fair idea of how things are going to go, and these the rate cut, I guess, that's going to happen on Wednesday, right? Everybody's pretty much backing it in, and are things getting baked in right now, or what's going on? Right, we're trying to figure it out in plain English. We're not trying to guess the market. We're not trying to um, outperform the algos. We're trying to take what the market is giving us, right? So how do we do that? Fairly simple. Look at where the Savage 20 are at, and look at the overall market. Look at where stocks that you've been wanting to hold for a while are, and look at the market. It's not complicated. It's not rocket science, but it does take a bit of studying, a little bit, right? And then just having the cojones to say, this is it, this is what I'm doing, and doing it. And then learning that, patience does pay off. Anyways, good morning, my friends, my fellow simpletons and degenerates. It is I, the Savage of Wall Street, once again, coming at you live from sunny and beautiful California. Wherever you are, I bid you good morning. Whether you are in the East Coast, in the Midwest, whether you are in the South, up in Canada, whether you are in Australia, East Asia, Europe, Eastern Europe, Latin America, South America, Alaska, Hawaiian Islands, coming at you live, my friends. And we're talking Wall Street today, right? We're talking what the market is giving us and seeing that, in fact, some stuff is green, and very surprised to see that. But is this synthetic, right? Is this something that is just a divergence and a diversion? Elon went on, I guess, and then there's some filings that are showing that he went in and bought 1 billion shares, or was it 1 million shares? 1 million shares of Tesla, right? Or $1 billion of Tesla. Either way, it's a ridiculous amount of money, and that just, why, right? The guy was just dumping it like a year ago, and now he's buying. Why is that, right? Are you extremely bullish on your company? I guess he is, or is there's a little more to it, right? Does he see that the numbers are just not there? And does he see that people are actually selling off the stock? And is he doing that so that he could just pump up the stock a bit himself? I don't know. I'm not Elon. But what I do know is I got to take everything with a grain of salt. It is who I am. And what I do know is that Sofi is 27.24 right now. Earlier on, it was 27.59 at a point. And I don't know if you guys joined me yesterday during the little 1 hour that I came in here, Sunday refresher, right, and to kind of get us ready for today. This bad boy was out there yesterday, and I was basically saying, and giving you my take on why I thought that, this week, although, it seemed like people were just going to be crossing arms and not doing much because of, Jerome Powell, right, I guess on Wednesday. I saw, I let you know why I thought that the economy is a little weak, and why I think that we're kind of on a downward slope, and why you should be on cash secure puts and holding cash. So anyways, this morning, it seems that I did tell you guys as well, as far as SoFi, $28 is the ceiling, right? And I told you guys, if SoFi tomorrow, that is today, rips around 4 or 5%, don't be afraid to sell some covered calls on SoFi and take some money off the table. Nothing wrong with that. I was telling you, look at the Novembers, um, and look at 30s. You probably be able to get anywhere from 2 to 250. That's what I said yesterday. You could look at the video. And sure enough, this morning, some people sold some covered calls and got 230. That was the high of the day. The low right now is 199. But again, the point is that $28 was the ceiling, right? And I told you guys it's going to be kind of a little tough one to crack, but not that it can't, but do you really want to just be holding and waiting for earnings, or do you want to be a little proactive and take some money off the table? Use that money as you see fit for anything, any reason, right? Whether it be to pay down your car note, your rent, buy clothes, pay for a trip, pay your mortgage. I mean, the possibilities are endless what you could use this money for, right? But you could have taken $2.30 per share. 100 contracts is $230. You would have done 10 of those. You would have brought in $2,300 to sell $30 covered calls expiring November 21st. Yeah. So that's what we're doing in this channel. We're trying to take advantage of opportunity that's there. We're not trying to guess what the market is doing. We're not trying to beat the algos. We're trying to take what the market gives us and give them nothing, right? So that being said, AI, look at AI. It's up 4% almost today. It was up 4% at 17.10 for a second. It's now $17.02. So I told you guys, C3.AI doesn't want to be down in the $15 and $16 land. It just does not. It's closer to $19, $20, and it's gonna right now. It's consolidating, right? It's consolidating, and it just doesn't want to be down here. It doesn't deserve. It has no business being down here. But you're gonna take advantage of it, right? You're gonna do what we do. You sell some. I told you guys, 1750 cash secure puts out to January. Out to 2027. Not the most terrible idea. I told you guys, SoFi, $30 cash secure puts out to 2027. Not the most terrible idea, right? You wanna play in this playground, and you don't want to risk, just your stock going down. Go through a cash secure put. Just dare the market to assign you and give you those shares, right? And then if for whatever reasons the stock is down and showing weakness during that time, you can go in through more cash secure puts, go a strike zone or two lower than where it's at, and get paid to buy the stock. And then you average down. Worst case scenario, you get 100, 200 more shares. When the stock runs 10, 15%, you go and do some cash secure or cover calls up a strike zone or two above where the stock is at. And then you bring in premium. And then you use that premium to go and look at, something that's been hit and it's undervalued, right? And you buy some shares and then you grow your portfolio. That's how we do. All right, what do we got here? Who do we have in this morning joining me? SJ is in the house saying, "What's up, Savage?" What up, SJ? How you doing? Jay Gill's in the house saying, "Good morning, all." Morning, Savage and all says, "Always be writing." B-Tram in the house. Ricardo Canales is in the house. What is up, my dude? Jude K, good morning. Kalo ZR had AI October 24th, 1850 calls trigger at 68. That is good. That is good. If your average is obviously below 1850, I don't see anything wrong with that. You're making money. The name of the game and the reason why you came into Wall Street, right, is to make money. You're making money. Now, whatever happens between then and now, who's to say? Who's to know, right? We don't know what's going to happen. We don't know what the stock market is going to do like later on today, right? We know where it's at right now. We know that Unity Software is up almost 5% and it's 45.57. Remember when I was pounding the table like a year and so ago, begging people to buy Unity at $15? dude, I was like $20 cash secure puts, guys. $20, 17, 18, $19 cash secure puts. Unity was at 25. I was like, do 22.50s. Go out to 2027. Buy Unity. Anything around $20 is a gift. I was saying that. Anything under 20 is nuts. It's a giveaway, right? And look at that. Unity is 45.55 at this moment. It's up 5% for the day. What do? Well, we take advantage of that. We go and we sell calls, right? But we're not going to go and 45 it. We're going to do 50s. 50s. If you bought Unity at $20, how long do you hold? Do you hold and wait for 100? We don't know when that's going to happen, right? What do we do know? We know it is 50, 45.55 this moment. You can sell some $50 cover calls expiring January, and you can bring in $618. $620. Say 620. So sell for 620, bring in some $620 and sell for $5,000 for your 100 shares. What is wrong with that, my friends? What is wrong with that? You bought a stock at 20 bucks, 25 bucks. You doubled your money. Basically, you're selling at 50. And then the $620 you get, you're selling at 56.20. 56.20. If the stock is between $50 and $55 in January, you're winning. More than winning. Because guess what? You can roll your call to like March and bring in more premium and go from 50 to 55 and bring in more premium. Or you could get taken out, get paid, and then go through a cash secure put. You're bringing in $5,000 for your shares, and then you got $620, right? So it's 5,600. And then you say, you know what? The stock is at 51 bucks. I don't want to buy it at 51 bucks. I want to buy it like 47 out in March. So you do a $47 cash secure put. So you're putting $4,700 away, guaranteeing you're going to buy those shares. You're on the hook for $47. The stock is 51. If you liked it at 51, why wouldn't you like it at 47? And then you go out in time and say, I want to get paid, I don't know, 300 bucks for my truck, 400 bucks. So essentially, instead of 47, you're buying it at like 42, right? $43, but you're getting paid. That's how you do it. If the stock shows some weakness and comes down, great. You have 100 more shares. And if it doesn't, then you get your collateral back and you got cash. You just made, 400 or 500 bucks on stashing your 4,700 bucks for a few months. No bank is going to give you that. You made money. That's the point of being in the stock market. So just saying, Unity, just an idea. So your AI October 24th, 1850s. I like it, brother. I like them, Kalo. Kalua is in a house. What is up? What's up, Kalua? I hope you're doing well. Cindy B's in the house saying, hey, Savage. Double D in the house saying good morning. Cindy B saying, hey, Savage, what do you look what do you like to look for at the for the option chain? Well, it depends. Every stock is different. Think of your stocks as children, right? I tell you guys to think of your stock as a building, because your shares, right? Your shares are tenants. Your portfolio is the building. You're the manager of that building, and you got to make sure they pay rent every month. They got to pay rent, no matter what. This is not personal. This is not you liking a tenant or not. This is you just saying, I have a building and I need upkeep. Right? I need to pay for like fucking PG&E, which is like Pacific Gas and Electrics. I have to pay garbage, right? Disposal. I got to pay for I got to pay for the building, right? Maintenance and all that stuff. And then you got to pay yourself, right? Because that's the reason you bought the building, is to make money, right? So then that's what you're doing. And so if I tell you guys, your stocks are pretty much tenants, that's exactly what I mean. They're going to pay rent. What do I look for? Well, every tenant is different, right? You're going to have some tenants that are, kind of cool, kind of quiet, calm, never give you issues. You're going to have some fucking head cases that are like, you're always getting a phone call because something's always messing up, or they always make, a big deal out of little things. But again, as long as they pay you rent, what do you care, right? So I'm going to look for something different. And you know, it depends on um, what field they're in, right? Like, you know, you're gonna have your your banks act very differently than like AI, right? And then you have quantum that's gonna act very differently than um, pharmaceuticals, right? So they're all going to act differently, but as long as they're all giving you, you know, pretty good premium, that's what matters. Or if they're not giving you insane premium, they have to be really, really well ran companies that you have a very good idea on where they're going based on, you know, you look at their board, you look at how they're managed, you look at their bottom line, and you're making sure that they are, you know, in fact making money, right? And that their fundamentals are good, and that they're worth you having them in your portfolio, right? They have to make sense. And you know, obviously, you're not gonna look for something that gives you 1% returns every month. That just makes no sense. But as long as they give you a good five, you know, 5, 6, 7% a month by selling covered calls, um, not terrible at all. But those have to be like, you know, very few, because I like to hold, you know, most 80% of my stock is stock that is going to bring in, you know, some really good premiums, you know. But like just an example, Sentinel One, the ticker is S, capital S. It's a great company, very well ran. Um, it's going to be $100 a share. It's at 18.42 right now. It's slowly moving, right? And you can go in through a cash secure put on a red day, right? Right now it's like 18 and change. You could do $18 cash secure puts expiring say December. And you could look in to bring, like, even if you were to do a cash secure put today, if you bring $145, that's not a terrible deal. It's not a terrible deal. You're bringing in almost 10%, right? A little under, for your troubles, and you're guaranteeing to buy it at $18. Is at 18.42 right now, but you're getting paid $145 to buy 100 shares. You know, so basically you're gonna give $1,800 to your brokerage firm and say, I want to buy this company uh, December 19th at $18. They're gonna give you $145. I don't think that's terrible at all. You're essentially buying the shares for like 16.55. That's crazy. That's almost at the 52-week low, you know, because the 52-week low is like 15 something, right? So what's wrong with that? You're going in, you're getting a really good company. It's not a massive return, but it's not terrible. And if you get put those shares, you're in a company into a company that's really, really well run. And when you do get put those shares, it's going to run 10, 15% in a day. It does that. And when that happens, you bought at 18, you say, you know what, it ran 18%, 20% in a day. So it's going to be like at $19 and change, right? And you're going to say, you know what, I'm going to sell some $22 covered calls um, up to January or March. And you're going to try to bring in more than $100. So you're essentially, you know, you bought at what, 15 and change, right? $16. Um, and you're selling at 22. So you made, right, like $600, and then the premium. So that's another, like, you know, 100 and so. What's wrong with that? You know, you just made, you know, that much money in a few months. And then, you know, you can go again and wait for it to show some weakness. And instead of doing, you know, $18 cash secure puts this time, you're going to do 20s, right? You're going to dare the market to put those shares at your in your account and go on. Now, this is a stock that's going to act very differently than, say, Riot. Riot is up 6.3% today. If you know, if you guys wanted to, Riot is it's at 16.88, almost say $17, right? Um, you can go and you can sell some December 19 cover calls, some 20s, sell some 20s. Stock is at 16.88. It's running, it's already ran like 7%, right? What are you gonna do? You're gonna sell some cover calls on December 19, some 20s, bring in 100, ask for $180. Ask for $180. What is wrong with that? You're selling at 20, you're asking for $180. So essentially selling for 21.80. There's nothing wrong with that. And If you got these shares through a cash secure put, that's the better. I ended up getting assigned on some 12s that I wrote, some 14s. I started playing this, buying the stock like outright. I think it was like $4 or $3 a share like a few years ago. And I've been just, Riot is awesome. It's so volatile. It goes up 20%, it goes down 15%, up 20%, but it always moves like this, right? Like it always goes in a slope like that, right? I guess it would be like this, you know, like that, or like however it makes sense to you guys, right? It always goes upwards. And that's what you want, right? You want stock that's over time it appreciates, and then you play this game where you sell covered calls and bring in premium, and you never ride on all of your shares. By the way, some people are like, "What you ride on all your shares?" If you have 1,000 shares, that means 10 contracts, right? You're not gonna sell 10 contracts. You're gonna sell 6 or 7. You're always gonna keep 300, right? Kind of chilling in case the stock goes on a massive Palantir like type of run, right? And then if it goes up like it triples 3x or 4x, then you can sell some more covered calls. At that point, you've already 4x your money, right? So you're like, okay, I'm totally cool taking money off the table. Sell 2 contracts, and if you get taken out, great. You still have 200. Then it goes up even. You sell more, say one more contract. Eventually, you're gonna sell them all, but you've sold like at a way higher strike price than when you bought, and then you make a lot of money, and then you're just gonna get assigned. You're gonna get all that cash, and you'll sit on cash, and then you're gonna pivot somewhere else where you're making more money. That's how you do it. If I was holding right now, Nvidia for some reason just refuses to go down. Right, totally okay. Nvidia, it does not belong where it is right now. Nvidia should be like 140. But it was showing weakness this morning, right? This morning it was at 172. Too bad it was like pre-market. And this is exactly what these guys do, right? The market managers, they know what they're doing, man. They're basically telling you this stock is down here, but they move it however they see fit, right? And then they're like, it's going to open up at this price point. And they see what people do, and people keep buying it. People are willing to pay a premium to hold a stock like Nvidia. It doesn't matter. Like, I mean, the stock will be $300 a share. It's just not supposed to be there now. Everything's expensive. I think that stocks are overvalued at this point. Look at the economy as a whole, right? Like the economy as a whole is telling you, people are losing jobs at a scale of like when the pandemic hit in 2008, right? Inflation is up almost 3%, and that's crazy, right? So you have you're losing jobs, you're bleeding jobs, and then the hiring that's going on, it's fugazi, it's not real. It's just look at, they just redid the numbers, and we were told 911,000 jobs, they didn't really exist. Those weren't really created. If you were to rework every number, if you were to rework all those numbers, by month, you see we actually were losing jobs, um, retroactive, right? And if you then take into account the fact that inflation is high, um, and you see what Target is telling you, that people are just not spending as much money. Walmart is telling you people are just not spending as much money. We're in a recession. We've been in a recession, but people just don't want to accept that. Right? That's totally cool. Totally cool. You take what the market gives you, my friends. But I've been telling this bear's been here for a while. Interest of full disclosure, I am bearish on the economy. I am a bear. I'm not like a perma bull. I'm not a perma bear either, but I am bearish. I'm a bear by nature, and just my trading style. I just don't like to get overvalued stocks. And you could say, oh well, Nvidia deserves to be $250 right now because that's where people are willing to pay for it. So it is that. It's like, okay, yeah, sure. Where it's a F-150 Ford, worth $80,000. You tell me, is it worth that? Would you pay $80,000 for an F-150 Ford truck? I wouldn't. I wouldn't. I'd rather buy a Rivian for that money. If I'm going to buy an $80,000 truck, I'd rather buy a brand new electric vehicle that's going to really make a difference, right? And I'll get a fucking SUV, and that's where I will go with my money instead of buying an F-150 that should be worth closer to $40,000, right? I mean, if you take into account, the price, that, I mean, the cost of, like, all the materials and then the assembly, and I mean, it's worth $45,000, if that. But I'll play the game. However, it's not worth 80,000. Some people were paying $75,000 for them. Whether it's because they could they could use it as a tax kind of deferment type of thing, and it's for their business, and they're like, well, I'm just gonna get my money back anyways because it's a write off. Okay, cool, but like for personal use, there is no write offs, right? And some people paying 70, 75, $80,000 for a F-150 makes no sense to me. That's the same way that I feel about specific stocks, right? I don't think Tesla just belongs where it is right now. Tesla's not supposed to be there. Tesla's closer to $200 a share, right? But people are willing to pay a premium to hold a stock for whatever reasons. Great, I'll play that game. During earnings, I go with some cash, some puts, and I make money. Which brings me to my next point, my friends. I bought some puts today. I actually bought some puts. I bought some puts on, I believe, Aaoi. Let's see. Let's put Aaoi. Yes, I bought some puts on Aaoi, and I got lucky. I ended up buying for 270. I bought a 270 and 275. Some $28 puts expiring October 17th, because the stock is hot, has run hot for like a week now. And it was $21, $20, and it's just like almost at 30. And there's a ceiling at 29. Let's see what happens, right? But I mean, I've made enough coin the last few weeks where I figured, let me take like $1,000 and then go with some puts on the companies that I hold. I actually hold this, and I mean, I like it being at 29. Of course I do. But it's just, does it belong there right now? It ran too hot. I think some profit taking is going to take place. I think it's one of the stocks that is kind of pricing in this Fed cut, right? And I think once it happens, it's going to go down. So don't be surprised if it goes back down to $24. Totally cool. In which case, then you're going to go with some cash secure puts, some 23s, some 22s. You're going to go out to like November, and you're going to bring in $3 a share, $2.50 a share. That's what Aaoi does. It does that all the time. It goes up to like 29.30, comes back down to like 22, goes back up to 24.25, comes back down to 22, goes back up, to like 28, 27, comes back down. It's just a very volatile stock. It's a writer's dream. I love the stock. I like the stock, but it's also, it has to pay rent, like I was telling you guys. What do we got here? All right, let's see here. So yeah, Cindy, that's what I do. I look at the option chain. Oh, I see what you're saying. What app? Well, it depends. I trade on Fidelity. I trade on Robinhood, Webull. I just look at that option. I mean, the main one that I look at, and I know it's probably not something that everyone shares with me, right? I actually look at the Robinhood option chain. It's just easier to follow, for me at least, because that's where I started. I started like, really trading like in well, actually that's not true. I started kind of trading on the 401k and Charles Schwab a long time ago. But when I really got, where I started buying stock everywhere, I didn't like to go with my laptop, everywhere with Charles Schwab. It just didn't make sense. And then Robinhood just made it so easy that you could do it on your phone. So like, and I have my phone with me all the time. So the main one I use is Robinhood, just because it's easier for me to it's like a fucking matrix at this point. And if it's something where like the spread is like 5 cents, 10 cents, and they won't let you go elsewhere, I go, to, and I look at, the chain, and I look at where I want to go on the strike zone, and the date, right? And I'll go and I'll input it in Charles Schwab or like Fidelity, and then I'll go up like a cent, 2 cents, wherever, there, and then I'll do the cash secure put or the cover call there. But I use the Robinhood app. That's just, it's the option change is easier to follow for me, at least, right? And some people like Thinkorswim, right? Some people like bar chart. I mean, it depends on you, on what you like. Whatever you're comfortable with, what's easier for you to follow, right? So everyone's different. Everyone's got a different strategy. Everyone's got their own, thing, right? As long as it's comfortable for you, and it's easier for you to follow, it doesn't matter. What matters is that you're making money. As long as you're making money, right? It's all good. Wing Commander in the house. Tolvin, what is up, brother? How you doing up in Europe, man? I hope you're doing well. Karen, hi, Savage, and everyone's Karen D's in the house. CKT saying bullish in NND. Earnings on Wednesday, same day as Fed meeting. Also, I just did a superficial look at DLO today. Link to a good breakdown in the Discord. Right on, dude. Thank you. BLSH, man. BLSH, I'm waiting for it to hit 40. I think like a few weeks back, like 3 weeks ago or whatever, or 2 weeks ago, I really was trying to do a $45 cash secure put and get $8 or $9 for it. And it got close, got like $1 away. And I was just like, I'm not going to go, I'm not going to chase it. If I would have gone and chased it, I would have, it went back up to like 55. I could have made money. But it's just one of those things where, like, don't chase it. It'll come to you. Now I'm going to wait, see what the earnings are going to do, and see if it shows any weakness in the next day or two, right? And it goes to like 40 for whatever reasons. I may go with some $40 cash secure puts out to like April or June 2026 and bring in like $10. Why not? I'm totally comfortable buying that stock at $30 a share. Totally comfortable at that. So I'm NMDM. I just bought the stock. I think I just bought like another 1,000 shares this morning. So I am just I like 140 something, I think. So I'm just buying the damn stock at this point. I don't care. I don't care I mean, of course I care what their earnings are, but at this point I'm not expecting them to do much. I'm just hoarding, just like I did with Open, right? Like I wasn't expecting Open to kill it, in every quarter at every metric when the rates are at 6%, 7, 8%. It just makes no sense. It's a real estate play, right? So right now that we're close to getting the first Fed rate cut, now it's moving up. The street found out about it. It's moving up. So same thing with NNDM. Same thing. Smart Rent. Look at Smart Rent. Smart Rent was like a 142, 141 on Friday, and it's at 150 something now. Listen, I told you guys, if you miss the train with Open Technologies, right? If you feel like you missed the train, there's always another Open. Look at Smart Rent, right? SMRT is a ticker. It's sitting like at 150 per share right now. It's just sitting there. There's nothing. There's no. It's just there. If you look at the option chain, there's nothing. There's nothing. There is no movement because nobody knows. When the street finds out about Smart Rent, right? It's gonna go up. So right now, I'm just hoarding. Buying the damn stock where it is at, and then just hoarding. And then once it moves up to $2, $3, $4, then I'll just start unloading it, right? And just I'm 2x, 3x my money, and I'll just sell half, recoup all my money. And then once I'm playing with house money, then I'll just see how it moves. And then if it goes up to $4 or $5, I'll do some cash cover calls out to like 3, 4, 5 months, and then bring in some money, right? So it's all gonna be a profit at that point. So same, like just like I did with Open. That's it. Tom Kaufman is in a house. CKT saying, to bring up a good discussion, when the market heads down, say someone has $100,000 in cash to invest, how would you divide up in the market? I know there are a lot of opinions, but what's your take? You know what's funny is CKT. I talked about this yesterday. Here, let me see if I can find it. I want to share this with you guys, right? Uh, Here it is. All right. I was here yesterday, and I showed this to the crew, to the peeps that were here. Um, it's basically a Wall Street Journal read, right? And it's a gentleman that I guess wrote to this one Wall Street Journal editor, and he's basically saying, I'm 67, my wife's 48, is financially illiterate, which is terrible to say because if he's so good at the stock market, I think he should just take her under his wing and show her about covered calls and catching your puts. But if he doesn't know about that, and he's just at the mercy of these fucking guys that are just charging him 1-2% every year, whether he makes money or not, right? This is where it gets really awesome. He says, I'm 67, wife's 48, financially illiterate. How do I teach her to manage our money? After all, I won't be around forever. They got a 12-year-old daughter. They have $1.1 million in a traditional IRA and $250,000 in cash. Um, they have, I think, 2 homes, one of them which they Airbnb. So they have money coming in that way. She's 20 years younger than him, right? And he does all of their investments and business payments. She works part time. He set up a trust, but I'm scared for her if I should pass. How do others handle situations like this? And so, that's this was going on yesterday. We had this kind of discussion, and I said, well, you're sitting on $1.1 million, right? And you have $250,000 in cash, but you don't need all that money. We could take out $1 million, just $1 million out of IRA. You could roll it over, right? And you could basically play yourself. You basically investing for yourself. Who's got a better vested interest in your future than yourself? Nobody, right? These a-holes, in Wall Street, they're going to manage these 401ks. They don't give a shit where people are making money or not, man. They're going to take money either way. Whether they make money, they're going to charge a fee. Whether they don't make money, they're going to charge a fee. And if they do make money above to 15%, they're going to charge an extra fee because, they outperformed the market. So they're going to obviously want to get a bonus. So this is what I said. I said you could do 30 Sofi cash secure puts out to, I think, 2027, I think June or April. And you bring in almost $10 per contract, right? That's 33%. And then I think it was, what was the other one? Sentinel One was the other one. I was like, why don't you do $20 Sentinel One cash secure puts? You're ahead of the stock. I know that, but the stock is not going to be there at that time, right? It's just not. It's the companies that are extremely good and they're making money. They're year in, year out. They're showing that they're outperforming the market. They're outperforming, and then their forward looking guidance, right? It's positive, right? SoFi is going to be $40-$50 by 2027, maybe more, right? Sentinel One is going to be $30 a share probably in 2027, maybe earlier. But just based on the numbers that I've worked in, and I'm being very bearish on it, still being bearish on it, they're outperforming. So I was like, you do 30 here, and then you do, I think it was 100 contracts, Sentinel One contracts, right? And so you were able to bring in, I think, for Sentinel One, I think it was like $8 per cash secure put. So you're basically bringing in like 40%. So SoFi is giving you 33%, and then you're bringing 40%. So basically, and then this is the thing that I said also. I said you can go through Charles Schwab, and then you could get into the ETF that brings you in 4 or 5% interest every year, no matter what. It's a VWXX. I think it's the V. That's like a V, like a Voltron. WXX, and it brings you 4 or 5% every year. So you put your money in that ETF, and then you do cash secure puts through it. They let you. You could do, Sofi, and you could do Center One, and it worked out to where we invested, I think, $500,000, just $500,000, and I think we brought in like almost close to $200,000, right? But remember, we're in the ETF that brings you in 5%, so you're automatically going to bring in $50,000 in a year, right? Automatically, you're bringing in $50,000 because that's the 5%. So then you add that to the cash secure put money, right? And then I think what else did we do? We did. I want to see what else. I'm trying to remember. I think Weeble. Weeble was the other one, and I think I did January 2027 $20 cash secure puts, and those brought you in, I think, 975, so almost 50% back, right? I think for like another $100,000 of that. So you basically bring in another, say, 48,000, 49,000. So we worked it somewhere to where we still didn't hit the million, right? I think we still had like $200,000 to spare just to keep, right? Like for a rainy day, or in case the stock market tanks, so you go in and you buy shit at the cheap. Say Nvdia tank. Oh, we did Nvdia. We did Nvdia as well. I think we did 10 Nvdia $200 cash secure puts out to like June 2026. The whole point is that we still had like $200,000 to spare, and we made almost $500,000 in or like $400,000 like in profit premium, right? So think about that, right? You bring in $350,000, $400,000. This guy is so worried about his wife. Oh, how will she do it? This is not a lot of money. I guess to him it's not a lot of money, but if he would just show her about cash secure puts, or if he would himself, learn about cash secure puts and covered calls, he could bring in, $350,000, $400,000 a year with that $1,000,000. Now you scale it down, right? Take a zero out, and then you got $100,000. It's the same thing. It's just numbers change, but it's the same logic, right? So like everything I just talked about, instead of 10 contracts, do two. Instead of 30, do three. I mean, so just using that logic, right? You keep bringing in money, and it's just percentages. At the end of the day, it's just a percentage. So whether it's like 40% of like a million, which is 400,000, or 40% of 100,000, which is 40,000, it's still 40%. And then the 5% that you're bringing in through, having that money, kind of stashed on that ETF, that's going to bring you 4 or 5% every year. And remember, this is just the first year. We're putting stuff out there like at 14, 16 months, right? So it's going to stay there the next year. So you're going to bring in, now 5% of not a million, but $1.4 million. You're going to bring in 5% of that. So it's compounding, which is the beauty of it. And then guess what? Worst case scenario, you put some shares into your account. You've been looking to buy those shares anyways. Now we can do covered calls, my friends. You're looking to that $1,000,000 is going to be $3 million in 5 years easily. But you just got to do it. It's a lot of money, and you're going to be like, oh my God, I don't want to lose this money. Of course, nobody wants to lose money, but I mean, what do you want to do? Do you want to just stash it into like a bank CD and bring in 2% every year? You could do that. You could leave it in that Schwab account and bring in $50,000 every year. You could do that too. If you're extremely scared, and you could do that too, right? Or you could be a little more proactive and say, you know what? I think I can do this. I think I can do this through cash secure puts and cover calls. But we didn't even buy any stock, really. We just did cash secure put. We didn't buy any stock. We're sitting on a pile of cash on $1 million, right? And that's the beauty of it. Like you could now take those $400,000 that you just made, right? And now you can buy, say, Nvdia at market price if you Or you could do it with cash secure puts, except instead of going out, to 2027, right, with Nvdia, you could now you do Nvdia and then you do a November cash secure put, right? Instead of doing 200 on Nvdia, you could go and you have $400,000, right? Nvidia's at 177 this morning. You go November 21st and you can sell 170s, right? You have $400,000. You take $170,000 of that money and say, you know what? I'm willing to buy Nvidia 170 in November. So why don't I do this? Why don't I do 10 why don't I do 10 Nvidia cash secure puts 170s expiring November 21st and bring in $7,800. And then in November you can look at if Nvidia gets assigned to you, great. If not, then you're gonna go and do the 170s again to December or January, and you keep daring the market to put those 100,000 or those 1,000 shares into your account, right? And if it does, then great. Now you're holding one of the best stocks out there, right? I mean, that's what you did with, like, the first $178,000. Actually, $170,000. You still have $230,000. What do you want to do with it? You could do Tesla $230 cash secure puts out to December. Let's see what those would give you. Tesla's crazy right now, but just being extremely conservative, right? You could do you could bring $176. You could do $230 cash secure puts for Tesla, and extremely concerned you bring $176 on your $230,000. I mean, it's there, right? Or you could be a little more gung ho and say, you know what? Yeah, I'd rather do, like, $300 cash secure puts. I don't know. But I mean, it's not. I wouldn't go with Tesla. I'm just saying it's an example. I would go with SoFi. SoFi. Bring in go to SoFi, cash secure, put it, and go to January, sell some puts. Do some. Let's see, it's at 27.49. So go to $26 cash secure puts. Sell 100, right? Actually, you won't be able to sell 100. You sell 80. Say 80 of them. And you say, you know what? I want to get paid to buy SoFi. $26 cash secure puts. I'll do 80 contracts. And you're going to bring in $23,756. Worst case scenario, you get, 8,000 shares of SoFi. What is wrong with that? So there's so many ways to skin this cat, right? Like, this is just an example I'm showing. Like, you could switch those tickers for anything else that you're looking for. But I mean, this is what somebody brought this into, like, the Wall Street Journal's editorial, and I was just like, you know what? That's a good discussion to have, right? My take is that, you can't be scared. You can't be scared, and you got to take what the market gives you, right? We don't know where things are going. We don't know, where the economy is going to be at, 6 months from now, a year from now. We do know where the stocks are at now. So using that information that we have and the capital that you come into, cash your puts, sit on some cash, because worst case scenario, let's say we hit, a recession that, according to me, we're in now. But let's say everybody starts saying we're in a recession, so that means we're in a recession, right? Okay, fine. Well, you got some good stock. You went through cash secure puts. You went, under market price. You waited for a day where the stock got hit 10, 15%. So you're getting it cheap as it is, um, taking advantage of that and bringing in money. What is wrong with that? So I don't know. And then, like I said, you could change that million to $100,000. You just take a zero away, right? And instead of doing like 100 contracts, you do 10. Instead of doing 30 contracts, you do 3, and so on. So, but there's so many ways that you can go about it and make good money. You just got to do it, right? Stop being scared, and that's the biggest thing. I think other than patience and learning how to fold your arms, because sometimes that is the hardest thing to do. Is nothing. Um, it's taking emotions out of trading. That's kind of the hardest thing to do, because we've all been taught, right, that you see a big movement of, like, say your portfolio is $100,000 a day, and the next day it's like 90,000. You're like, oh shit, I lost $10,000. But did you really? Or is the stock market doing just what the stock market does? Like, you could have made $10,000, but it went down 10,000. So that's what the stock market does, right? Nobody knows what the stock market is gonna do, right? Not even the guys that are in the stock market. Is its own beast. Don't try to outthink it. Don't try to outdo it. Don't try to don't try to time it, right? Just stay in it. The longer you stay in, the more you start seeing patterns, right? And even then, it's the patterns. They fluctuate. So nobody knows what the stock market is going to do, right? But take advantage of where the stock market is at. Take advantage of your stocks. Look what the stocks are doing that you're looking at, right? If a stock is down 15%, you've been eyeing it for a couple of months, and it's finally, you're like, oh shit, it's down 15%. You don't have to buy it where it's at. Go through cash secure puts and go a strike zone below where it's at now. So you can buy it cheaper even then, and go out 2 months, get paid a nice handsome premium for it, right? And then that premium, then you could buy shares at that with that money. Because guess what? That's premium money anyways, right? And so that's free stock. Worst case scenario, the stock goes down some more. You get placed those cash secure those that cash secure put is assigned. You get those shares, and then um, you have a break even point. So then the stock's going to be down there, and then the stock that you bought at wherever you bought it at that day when the stock was down 15%, it's going to average down. So you're winning either way, right? And then best case scenario is nothing happens. They return you your collateral because the stock recovered. And guess what? The shares that you bought that day that were 15% discount, they're worth more now, and you got your money back. So you got free stock. I mean, what's the problem, right? You have to get your head around that. Once you get your head around that, it should become so simple. It's not rocket science, but you just got to do it. You just got to keep doing it. The more you do it, the more that you train your brain to, like, really seeing this, and the more money you'll make. All right, Moneymaker Juan in the house saying good morning. Oh, Chase Rosita Parker is in the house. Hector saying good morning. Cindy B saying thanks for the IonQ tip. I sold 2 puts and already cashed in one of them, and I up over 55% on the other. I'm glad I've been trading IonQ since it was 13, $15 a share. So I love this run. I told people that this was a $50 stock, man, and you know what? Some people listen. Some people are like, you know what? It's not my type of contract. It's not my type of stock. It's all good. There's always another stock, but made a good call. James of the Trees is saying ahoy, lucky number 13. Juan Velasquez saying good morning and happy Monday to all of us. Great to be here. Savage looking for my Aaoi put. I got last month. Now it's 50% in the green. That's what's up. That's how you do it. It's free money, my friend. Free money. I bought back my my cash secure puts today. My stickers triggered, and when that happened, I was like, "Ooh, nice!" And then I bought puts instead of selling puts. I actually bought a couple of puts. So now I'm gonna wait for it to come down because it's ran too hot. We'll see what happens. All right, Savage and the Bagel family, look at that SoFi 52-week high. And this is when we say, you know what, SoFi, thank you so much for being so awesome. Why don't I sell some $30 covered calls expiring November and bring in over $2 a share right now? You're selling at 30, right? And you're bringing in $2 and change. So you're really selling at like 32 something. There you go. In case there's a little drawback, right? In case these numbers were baked in the Fed rate cuts, right? And then everything goes down after the cut. You know, if there's I think everyone's like expecting a 25%, 25% basis points. I mean, if there is no cut and there's that, um, then it's gonna go. It's gonna be a bloodbath on Thursday. Um, If a 50 basis points, though, I think people are going to be extremely happy. So, but we don't know what's going to happen, right? We don't know. So just take what the market gives you, right? Um, so I'm very excited to see what happens on Wednesday, guys. Let's see here. Yes, indeed, Lisa. 52-week high. Don't be afraid to take some money off the table, guys. I bought SoFi March $25 calls. It's up 1,400%. Take some money off the table, Lisa. Don't get greedy. Bears make money. Bulls make money. Pigs get slaughtered, my friends. Just gonna say that. Don't be afraid to take a little money off the top right now. You know, there's nothing wrong with that at all, my friends. Let's see here. What else do we got here? AI. Look at AI. See, I told you guys it's up almost 5% today. I told you guys, man, AI does not belong in $15 land. It just doesn't. It's closer to $19, $19, $20 a share. But it's all good. I told you guys those 1750 cash secure puts, expiring January. Those were giving people like $4 a share earlier in the month. I think $3.50 to $4. Now those are $2.48. It's all good. 248 is not terrible, man. I mean, it's still there. 248 is not bad. You're essentially getting the stock at $15. That stock has no business being in $15 land, right? So I say wait for a red day. See what the market gives you. Do not be afraid to sell some Unity $50 covered calls out to, December or January. Bring in $6-7 per share. Why not? Start thinking about taking a little money off the table, guys. Don't be afraid of that. Look at GME. GME hit 25.70 something today. It's down now. It's just kind of coming back down. But these warrants, man. This is gonna be the funny thing. I think that there's some brokerages that have basically told their clients that they're not going to be giving them warrants. They're going to give a cash equivalent, right? So I'm very curious to see how that's going to play out, because does that mean that they don't really own the shares? Are these the synthetics? It's going to be very interesting, and I'm wondering if there's some lawsuits afoot here. Robinhood, if they get sued, on a massive level, Robinhood may get hit big time and go from like $100 and change a share to like 50. I would be very interested to jump back into Robinhood at that point. What's going to happen? I don't know. Nobody's ever been here before. We haven't been here yet. These warrants are a new thing, right? And then you're getting one warrant for every 10 shares that you own, equivalent to like $32 a share, right? So I guess 100 shares would give you 10 warrants, which would be equivalent to $32, right? Or $320, sorry. Are they going to give you $320? Or they're going to give you? Will you be able to buy warrants with that? I don't know. I think the shorts are going to try to sneak, their way out of this one, wiggle their way out of this one. I think Cohen put them in a really tough spot, and I'm extremely curious to see what happens. Um, I'm holding shares at this point. I haven't written any covered calls, and I'm going to be looking to see if we hit $30 by October. First week of October is going to be very, very interesting, because if we end up seeing $40 a share, and people say get $32 for 10 warrants, are they? I mean, I don't know. Is that going to be a big deal there? Because they're losing $8, right? So, could that be a contention for a lawsuit, or would they be given? Will they? Are they going to give them $40? The whole point of warrants is that you can exercise them for shares. So how is Robinhood and I think Mumu and other outfits, how are they going to handle that? I'm very curious to see that, because this has never happened, right? So I am very curious to see that. I'll tell you this right now, guys. The first run to $100 a share, if GME gets to $100 a share, warrants or not, I'm selling. I'm selling, because that'll be $400. That'll be equivalent before the split, right, to $400 a share. So, I mean, that's what I would do. I'd sell. I would sell, um, and I may keep, I don't know, a couple of hundred, but I'm going to sell most of them and just take money. I'll take money because I really want to sit on as much cash as possible. So now I know that there's some guys, some people are going to say, "Oh, you're not really part of the army," or it's like, dude, I'm here to make money, right? Like, whatever, you know, political, or whatever, personal, like, vendetta you have against a specific person or an outfit, it's got nothing to do with me. It's not personal. That's the worst thing you can do, is make this personal. I don't know if you guys saw the movie, Dumb Money, and I don't know if you guys know America Ferrera. That was the character of the Spanish girl. I think she was a nurse in the movie, and she kept buying options and shares, and she was up massively, right? And she could have sold and made over $1 million and changed her life completely. But she was like gung ho and, like, very militant about, like, oh, we gotta stick it to the big guy because the little guy always loses, and we have to stick together. And, like, then she was holding the bag because it just tanked, right? And then those options became worthless, and it's just terrible, terrible and unfortunate. But it does happen because for some reason people think that they're gonna make a difference by holding a stock. It's just not gonna happen, man. There's just trillions of dollars involved here. These guys, they're greasing the right wheel. They're connected to the presidency, the vice presidency. Look at Peter Thiel, man. He's really the guy behind um, Palantir. He's best friends with the vice president, right? He literally financed him to become senator and then president. So, I mean, that's who we're talking about. That's the type of people. They give millions and millions of dollars to Democrats and Republicans alike. Now, if you want to have a conversation with it, we shouldn't have money. We should have money out of politics. I agree with you. That's completely fair. But to try to change Wall Street, which is like trillions and trillions and trillions of dollars moving every day, like, you're not gonna mess with anybody's money, man. Not the real money. It's just not gonna happen. So, which is why as soon as things go, to $100 a share with GM, I'm selling, and I may keep $200. I mean, 200 shares, um, in case it runs away and it goes to $10,000 a share, right? So, sure, I'll do that, but It's not personal. So hopefully you guys won't see it that way either, and you'll be able to take some money off the table and change your lives, right? So I know, what do I know? I know that I paid on average $13 a share, right? And if I sell at $100 a share, I pretty much 8x my money, you know. So that's I got to look out for me and my family. That's how I look out for me and my family, is taking money off the table. It's not personal. Let's talk about Rocket Lab. Where's the price headed? Rocket Lab. You know what? I haven't even looked at. I got rid of my Rocket Lab once we ran to 30, man. I don't look back. That's one thing I don't do, is when I unload or offload. Um, I'm not one of those people that goes back to the stock and stalks it. Right? It's called like stock stalking. It's like I don't do that. Um, Rocket Lab wasn't it like a 30 something not too long ago? Let's see here. Yeah, it was like $39, and I was saying $40 cash secure puts. Out to January, not terrible. 35 even 35 to I think $35 cash secure puts out to 2027. I think yeah, April 2026 and January 2027. I was like, they were bringing in a lot of money. And I was like, those are not terrible. Rocket Lab, where is it going to end up? I don't know, man. I don't know. I just could it go to $75 a share? Sure, it can, but it can also go back to 20. It just depends. I mean, SpaceX is also in the business, right? You have other companies that are in the business, ASCS. Um, I have some $45 and $40 AS and some $50 ASTS cash secure puts expiring, I think, 2027 and in April 2026. So that's where my money's at right now, because I think that those are safe. I'm not in Rocket Lab at this moment, so it'll be disingenuous for me to just out of the blue give you like a price point. But I mean, does it have a bright future? Yeah, man, it's a good company. It's a good company, and they can't build rockets fast enough, right? They have all these contracts. They have a backlog. I mean, it's you can't go wrong if you did $50 cash secure puts on Rocket Lab expiring 2027. Right? What do those bring you in right now? Um, January 2026. $50 cash secure puts bring you in 1443 right now, right? So you literally could make 1450. So $1,450, right? For putting away $5,000 until January 2027. No bank is going to give you that. I know for a fact. One third. It's almost one third of the money. Almost a 33% return on your investment. You go through a SVWXX ETF like Charles Schwab, right? In Charles Schwab, you're bringing another 5%. So that's like what, 33% and 5%. That's 38%. No bank is going to give you that. So I mean, that's what I see, right? Where is it going? I don't know, but I know that it's undervalued at $50 a share in 2027. I know that for a fact. It's undervalued, but I'm just taking what the market would give me. And I wouldn't go today. Like, I wouldn't buy today. I wouldn't go through a cash secure put and sell today. I would go on a day when it drops 5% or 10%, right? And and make the premiums that much more juicy. Where am I today? I bought some more XOXS. So I'm kind of, um, trying to protect myself when the market, and if the market collapses, because these are going to go to like $20, $30 a share. They move quick. SQQQ, I bought some more SQQQ this morning, 52-week low. RXRX, I'm so glad that I was able to roll those $6 cash secure puts out to January, because I brought in like $1,800, and my break even point is like a 383. So I'll just laugh when I get placed those shares. Um, TerraWolf. TerraWolf is down almost 5% today, my friends. Today, actually, I'm doing it right now. I'm going to go to November 21st and sell some cash secure puts. And I'm going to do $9 cash secure puts. Let's see here. I already have covered calls out. Now I'm going to choke it. And we're going to do some TeraWolf cash secure puts because the stock is down 5% today. TeraWolf is a very good company. So let's go to November. And do some $9 cash secure puts. We're going to do two, and we're going to ask for $93, 93 cents per. See what happens. So essentially, I'm bringing in more than 10%. There it is. It's out in the ether. All right, let's see here. What are people saying? Double D, let's talk about Rocket Lab. Was the price headed? We just did. Lisa saying you can buy GME 17 October $30 calls for 57. You can. You can. Do you want to though? That's the thing. Why don't you do some $30 cash secure puts out to January? Not terrible. Bring in some dough. Nobody knows where that's gonna, how is that's gonna go. But I mean, I don't see anything wrong with that. If you did through, if you use premium, that you okay. So if you did a cash secure put, right, and you brought in premium, and then use that premium to do another cash secure put somewhere, use that premium to buy a $30 call GME. I feel a lot better with that because it's just free money at that point, right? So if you're gonna gamble it away, make sure it's not your own money. So right now you have two different buffers that you've gone through. So it's like yeah, it's just house money at that point. So it'd be better to get a call, for 50. If you're gonna waste $57, right? And you're probably not gonna do one. You'll probably do like three or four, maybe more. So you're talking about a couple of $100. You feel better if it's if nothing happens, right? And those just end wordless, dying wordless, then yeah, it was a premium, well, a premium of premium anyway. So Lisa saying you're right. We need to have exit strategy in the event of a squeeze. Absolutely. You can't be left holding the bag, man. That was a good movie, Karen. I agree. And those Domo Casualty Puts were great, right? I told you, man. I told you, Domo Casualty Puts at 13 and 14 were key. And you always go out a couple of months to bring in more premium, right? That's just how you do it. Rocket Lab is a great defense stock as well as ASTS. Rocket Lab needs more season earnings in order to sustain the 50. Um, yeah, but again, like I said, if you go to 2027, you're talking about at least another six earnings, right? So they will make money. They'll keep making money, right? They'll keep making money year over year, and that is, I mean, those are safe. Those $50 are safe easily, easily. And I get it. It's your humble opinion. It's all our opinion, of course. I get it. No worries. Lucky, Mr. Lucky going around saying in the house saying savage. Got to go. We'll listen later on, says Juan. Juan, have a great morning, brother. Have a great rest of your morning. I hope you guys, I hope you do well. And I know you're getting ready for Spain, so it's all good, my friend. So let's see here. Red Cat. Oh, I wrote some Red Cat cash secure puts this morning, my friends. Just so you know. Here, let me show you guys. Red Cat. Yeah, here we go. So I wrote some red cats this morning, and let's see here. Oh, it's starting to recover. I did it when it was like close to 6%. So I wrote some $10 October 31st red cats, and I got like 125 for them. No, oh, I'm the only one. It one triggered 122. All right, it's the only one that triggered the 122. Um, so that's where we're at, and it started to recover. So they just used me as a data point. So yeah, look, guys, I'm bullish on Red Cat. Conflicting signals. Some analysts maintain a strong buy consensus with significant upside potential, while others offer a negative outlook, citing concerns about operational performance and recent short seller reports. But that's the thing. It's shorted. It's heavily shorted. You guys know I like my shorted stocks. I like good companies, good fundamentals, very well ran, and shorted. Just like they did with Sofi, they've done with GME. They're doing with AI. Um, Tesla is another heavily shorted stock. I mean, this is why these companies run so fast and so hot. That's why they drop so fast sometimes. Once those failure to delivers come in, it's like, listen, red flags go off. Shorts have to cover, my friends, and then they just right. And then when they ladder attack it, you could tell by the way that it's being sold. You could see the ladder action and how they fucking attack it. You know that they're just synthetically keeping it down, right? Stock has no business being there, but that's what they do. Totally cool. Open Technologies, great example. They shorted that shit to like 60 cents a share. I was pounding the table telling people, please just buy the damn stock. Just buy the damn stock. You know? And some people, again, I was not trying to give financial advice. I just said I just bought the damn stock myself. And they were like, well, should we do cash secure puts? I was like, nah, if you just buy the damn stock at this point. That's what I'm doing. I'm just buying the damn stock because it makes no sense to do cash secure puts. The last time I did cash secure puts, it were $1 cash secure puts, and I think I brought in like 15% every time, right? And eventually they got placed on me, and the rest is history. But you know, I love my shorted stocks, man. It's a strong buy consensus by analysts. Significant projected upside. They got some catalysts, large army contract, and reconnaissance drones has significant boosted red cat fortunes and outlook defense sector. And look, right now they're going to dump so much money into national defense, guys. So that's you could have bearish arguments, but it's you guys know Republicans love their national defense, man, and a lot of them are into this stock. That's another thing. Yeah, look at that, right? Negative outlooks has a negative valuation, downgrading the stock from a strong sell to a sell candidate. So they went from a strong sell to a sell. That's positive, right? View potential weak performance in the near term. Near term. But remember, whenever I invest in a company, I tell you guys, I'm willing to hold it at least 5 years. We're not trying to get rich quick here. We're trying to see how the stock moves. We're trying to go with it, right? Cash secure puts, get assigned, cover calls, and then we're always staying ahead of the stock. In cash secure puts, we're staying below the strike, so that it makes sense if you get put those shares and you bring in a lot of premium. That's how you do it. The stock is extremely volatile, which is why we like it. I don't see that as a negative. Okay, and Nvdia would be another highly volatile stock. It's that most traded fucking stock in the world. Okay, that's why it makes so much money. It's good premium. Catalytic events. The recent U.S. Army contracts major catalyst, but this is contrasted by negative news from short sellers, making the situation complex. What is complex about that? It's getting shorted. There's hit pieces. Um, I, I love heavily shorted stock because it's just they make mistakes. The shorts always get greedy. They always spig around too long, and then they get their comeuppance, and you end up seeing a lot of grain really quickly. Not saying that that's what's going to happen. I'm just saying that's kind of what usually ends up happening, right? And it's more likely that it will happen than not, right? So that's exactly why I'm very bullish on Red Cat. I like the stock. It's a company that I see myself trading for the next few years, and the best way to own it, if there is some type of uh, bearish, short term um, volatility, that's why you go through cash secure puts, so that you can offset that negativity. If you do happen to, you know, going through cash secure put and you get a sign, no big deal, right? Let's see here. Mr. Lucky saying options on open are fucking bananas. Cash secure puts are printing. I told you guys $8. Like, we went to 9 for a second last Friday, and I did $8 cash secure. I think Thursday. $8 cash secure puts out to I want to say November, and I brought in $2 per contract, or per share. So 200 bucks times 10, that's $2,000, and I'm just daring them because I mean realistically I'm buying at $6 a share, right? Because I'm doing $8 cash secure puts. I brought in $2, a little over of premium, and at this point I'm just crossing my arms and just seeing those cash secure puts just wither away. It's all good. Double D saying I wrote 55 and $60 calls, or yeah, on all of my Rocket Lab, and I see nothing wrong with that, my friend. 55 and 60s, all good. You're staying ahead of the stock, and you brought in premium. I see nothing wrong with that at all, my friend. Um, so let's see here. What else did I want to talk to you guys about? So again, when it comes to Red Cat, um, another reason why I'm bullish is because I see op-eds like this, right? Um, I see the Wall Street Journal, right, and I see that that Trump is massing military might near Venezuela, and whether you're a Democrat or a Republican, you should know this. Um, I think he's somewhere in that area. Kind of, he has battleships, and I think Guyana is kind of an area where he has a lot of personnel in now, and he's kind of surrounding the area of Venezuela. And I think he's just daring them to do something stupid. Don't be surprised if we go into a war with Venezuela. There's a lot of stuff going on politically. Numbers are down, and one of the best ways to like synthetically gain support, I guess, and not just this president. That's like a lot of precedents in the past. Is kind of putting us in a position where we go to like a war, so that people can say, well, if you're not with us, you're against us. Are you not proud of the U.S.? We're at war. We should all rally together. This is what we did during World War II, right? Like everyone came together and said, we got to support our troops. We got to stand behind the president, and so that's kind of the same playbook that they've used for so many years. And so when it comes to like companies that are in defense contracting and national defense, um, this is why I'm kind of bullish on these, is because if we do happen to go to war, right, and now we have kind of a tougher stand and rhetoric against Russia and stuff like that. So I don't know where we're going with this, um, but I just wouldn't be surprised if we end up to going kind of into like a situation where there's military boots on the ground in Venezuela. So I hope not. No, nobody wants people to lose their lives over a conflict that can be avoided, but I don't know. Hey guys, so I'm going to start getting out of here because I have some stuff to do. But stock market right now, we're getting hit by the Koopas, man. We're getting hit by the Koopa Troopas. So take advantage of that. If a stock goes down 5, 10, 15%, cash secure put it. Go one strike zone or two below where it's at right now. Go out 2, 3 months. Get some premium. Stock running 5, 10, 15%. Don't be scared to write some covered calls. Make it real. Take money off the table. Start writing some $30 Sofi covered calls, expiring October or November. Bring in some money. Make it real, right? Don't be afraid of the upside, my friends. Do not be afraid of the upside and do not fear the downside. We're here to make money. And the best way to make money is to mitigate risks. The way we mitigate risks is by buying a company that's getting hit 15, 20% today, and we go below one or two, strikes down, buying that even cheaper than it is today. If it's already a 20% discount today, and we go in down 10%, that's 30%, and we get paid another 10% for that, we're at a 40% win. So you're basically buying that stock at a 35 to 40% discount. What is wrong with that? Nothing. Anyways, my fellow simpletons and degenerates, I'm going to get out of here. I will be seeing you guys tomorrow, if so briefly, because I do have a a a PT appointment, and back is still kind of funky. I'm having issues with my foot, if anything. So I think it's a sciatica issue. So we'll see. We'll see what happens. We see what the doctor says. We'll see what the PT says. But I'll see you guys tomorrow, maybe a little earlier, for like 30, 45 minutes. We'll talk about what the market's giving us, right, and then maybe what to expect on Wednesday. Mm, don't be if don't be don't be shocked if tomorrow you see a nice little pump in the morning. It sometimes happens before rate cuts. We see a pump, and then it stays within the day, and then the next day it pumps a bit, and then it just tanks because they're pricing everything in, and then it's rug pull. So be prepared for that, and don't be surprised if that happens, right? Because it's happened before, it can happen again. But if we do end up seeing just green all over, great, great. Go in and sell some cash cover calls, make money. Sell ahead of the stock, a couple of months out, bring in a lot of premium. You know, sell a couple of contracts. Use that money to make your lives easier, whatever that means, right? Uh, my fellow simpletons and degenerates, thank you for watching. I'm the Savage of Wall Street. I will see you guys tomorrow. May you guys have a great rest of your day. And you guys, keep your nose and ears to the ground. See what the stock market is giving you. And if we see some more weakness, go in with catching your puts. All right, guys. You guys take care. See you guys tomorrow. Until then, peace out. I'm Savage of Wall Street. Later, knuckleheads.